Good morning, and thank you very much for inviting me to speak at the Future of Manufacturing Summit. My name is Smale. I'm a director of Vivid Economics and a partner at McKinsey, and I work in sustainability and have been for the last 25 years thinking about the economics of sustainability, the future of manufacturing, the future of finance, and the future of public policy. And today I'm going to talk to you about navigating a reset in priorities that this is creating, and looking at the bigger picture on what comes next. Next slide, please. Many of us could agree that we'd like to see a society which is sustainable, inclusive, and is delivering strong economic growth. And the emphasis on the sustainability part of that has become much stronger in the last 2 years, driven by two ambitions. Next slide, please. The first of these is to control climate change with all its devastating impacts. And that is condensed into an objective which we call net zero. That is reducing carbon emissions to close to zero, and for the remaining ones we can't eliminate, offsetting them with carbon sequestering activities. So that's net zero. Many countries now across the world have adopted net zero targets, and many organizations are doing the same. But it's not the only crisis we're dealing with. The second crisis is the loss of biodiversity, species extinction, the degradation of ecosystems and all the services they supply. And that is the nature positive agenda, and countries are starting to show their commitment to that, and so are corporations. Let's move on and look at what this means for manufacturing businesses. Next slide, please. For a board, there are four main profit drivers. The first is portfolio strategy, second, green business building, the third, market share gain, and the fourth is green operations. But within the first of these, portfolio strategy, one of the main decisions that boards have to make is capital allocation between assets, between manufacturing assets in different locations of different ages, producing different products. And we think about these as dividing into four categories. Leading assets that under a net zero, nature positive world can perform well and should attract the lion's share of investment. Assets which you could put in a category we'll call harvest, which can be run until the end of their life, can attract some maintenance investment, but will never be out there in the lead. Niche assets, which despite some of their inherent weaknesses actually perform very well because their particular characteristics in the markets they serve, and assets which in due time will be best to exit from. So that's the portfolio strategy. If we think about green business building, perhaps this is best understood by example. We've seen very high valuations of new electric vehicle businesses coming through, alternative proteins businesses, renewable energy businesses, and we're starting to see increases in land prices in some places. So a whole range of different types of manufacturing businesses and also assets which are being affected by these major transitions. On market share, and the things that the boards are looking for in this area is to identify where those opportunities are, those value creation opportunities, to think about the timing of market entry, and also to develop really effective go-to-scale strategies. We look at the third area, market share gain, and there are a number of things that boards can take an interest in here. One is brand and reputation. This a bit later. The second one is to be in the right markets, in the right places. And if we have time, I'll show you some of the different features we see in different jurisdictions at the moment. And third is to have strong margins, and margins drive market share ultimately. And that margin issue brings us on to green operations. Looking for win-wins where it is you can reduce costs as well as improving sustainable performance, particularly through greater energy efficiency, looking at digitization, looking more broadly at innovation strategy on a sectoral level and how that applies to individual businesses. And finally, looking at how to adopt and roll out innovative technologies within a business. So that set of issues which packs under these 4 profit drivers that addresses a lot of what it takes to become an effective board in this reset agenda. Next slide, please. One of the most interesting things that's been happening in the last 12 to 18 months is the change in mindset in finance. And the relationship between finance and manufacturing is that these effects will trickle down into manufacturing. It's most strong currently in Europe. It's beginning to show signs of entering in the US, and we expect it to move into other regions of the world as well. So I thought you'd be interested to see this. And I've broken it down into 4 pieces. The first is the changing valuation of green companies. So we are now seeing an interest in the financial community from understanding new green opportunities. They see the markets changing there, and there are valuations to be had for showing that the business has understood where this sustainable future lies and has a strategy to tackle it. The second one is Paris alignment. So people may remember from 2015, the Conference of the Parties in Paris on climate change. There was an agreement there to limit warming to 1.5 degrees Celsius, and many corporations and financial institutions in particular are now committing to align their investment portfolios with that. And that means they are having conversations with manufacturers and others about their own alignment. And in due course, they may indeed adjust their portfolio holdings and disinvest from some corporations as part of that. The second thing which has been evident in Europe in the last year or two has been the change in flows into ESG funds, which are now more than 50% of fund inflows in Europe, which is a completely new trait. We remains to be seen how long it continues, with oil prices having gone back up, but that's been a very strong effect, and perhaps a surprising one. And the final one is climate stress testing requirement, which people won't be aware of outside finance, but within banking and pension funds and insurance has become a major risk management activity, a requirement of the UK financial services regulators moving into Europe now, and like to be picked up in the US soon, which will then cover a large proportion of the world's financial institutions. Next slide, please. So having tackled what the pressures are on manufacturing for finance, now let's look at markets and policy. We have a whole range of things going on here. Green product demand is starting to emerge in many areas, for example, steel and the vehicle supply chain. We have disruptive price changes in green technologies, particularly in renewable energy, in battery technologies as well. And we have governments weighing in with large amounts of public funding to accelerate innovation in certain technology areas. And the pace of change there is really very rapid in some places. We also have the spread of carbon pricing, including carbon border adjustments, which effectively transmit the pricing into imports. We have that in Europe at the moment. There's quite widespread carbon pricing now in the US, and I'm sure there will be further consideration of carbon border adjustments in other parts of the world. We also have regulation of market access, which is excluding certain non-sustainable technologies from markets, such as vehicles, energy inefficient machines, and deforestation goods. So there's a whole load of things going on here, and I'll just add to the end, there's a major shift in the depth of decarbonisation that's possible within operations. There are businesses now that are spending a lot of time thinking about designing for circularity, which is a big change in norms. And there's a big push also for supply chain transparency. We're going to see this in land-based industries a lot, but that will include the sourcing of basic materials, minerals, and so on. So in summary, there's a lot going on. Some of it's driven by policy, some of it's driven by consumer demand, some by finance. And we're seeing an acceleration over the last 12 to 24 months on climate, and we're expecting similar novelty and changes coming forward on the biodiversity and nature side. Thank you very much indeed for your attention.